Hello everyone, welcome to another RF Crypto video. Today's video is all about crypto adoption and what the state of it is currently. But before we get into that, obviously we have to look at the crypto markets. It went up by about 0.74%, which isn't much in crypto terms. We are used to seeing a lot more radical changes in prices, ranging from 5 to 15%, so 0.74% isn't really much. Bitcoin went up by almost 1.5%, Ethereum went up by 1%. We see Solana down by 2%, so it is a mix and match, as always, of cryptocurrencies going up and down, so a mix of green and red. And this mainly happens when the markets are trading laterally. So there isn't significant good news in order to push the markets upward. So because of consolidation, because of lateral movements of the markets, this is the way they act. Some cryptocurrencies will move upwards and some will move in the opposite direction due to token specific factors that cause that sway to either side. Looking at the Bitcoin chart, we see that it saw two quite big red candles and then it dropped all the way down to test the $45,000 support level, but then it quickly got bought up and we saw four green candles following that. So the longs were dominant and it went all the way to test the $47,000 resistance level, and it didn't manage to break through because every time it tried to touch it, the bears got in on the action and started selling in order to capitalize or in order to keep their positions stable by keeping the Bitcoin prices below the $47,000 level. Because if those traders are in the short position, that means that they're betting on the price of Bitcoin to go down. And if the price of Bitcoin goes sufficiently up, then their positions will be closed because they'll be in such a massive loss, such that their leverage position will become liquidated. So it is a tug of war right now between the bulls and the bears, and we see it still trading between $45,000 and $47,000. And we'll have to see what happens in the next few days in the markets, any big news, any major changes, so that it either breaks the $47,000 resistance level and shoots upwards, or it comes down and tests or even breaks the $45,000 level and goes downwards towards 42,000. Now let's look a bit on crypto adoption. Inflows to Canadian Bitcoin ETFs hit an all-time high. So these ETF holdings have increased to all-time highs and spot-based products are leading the way. So remember that the United States only has future-based ETFs, which means that the ETFs are backed by Bitcoin futures and not by actual Bitcoin itself. Meanwhile, Canada has allowed the spot ETFs to come into the market. So it's one of the only countries in the world with spot Bitcoin ETFs. And people in the US are hungry for it, and I think a lot of US money is flowing into Canada at the moment. So Canadian Bitcoin ETFs have increased their holdings by 6,594 Bitcoin since January, so in less than 3 months, to reach an all-time high of 69,052 total Bitcoin held. So there's this one spot Bitcoin ETF called Purpose Bitcoin ETF, which saw the biggest increase in holdings over that time period with a net growth of 18.7%, and now they hold about 35,000 Bitcoin. So this Purpose Bitcoin ETF, which is a spot ETF, currently has about 1.68 billion in assets under management. And as I said before, there's no such spot Bitcoin ETF available in the United States, but the metrics show that investors are very hungry for the Canadian product, and spot Bitcoin ETFs not only in Canada but in the US are in high demand. Despite the fact that it doesn't exist in the US, it doesn't mean that people don't want it. People definitely want it, and if it gets approved by the SEC, we will see it selling out in a matter of seconds. And I think a lot of money that is flowing into this Purpose Bitcoin ETF is actually coming from the US. Another factor is that the crypto exchange outflow rate reached a 2022 high of 96,200 Bitcoin per month. When there is a great rate of outflow from crypto exchanges, it is usually a bullish factor because it means that people are wanting to hodl. When outflows increase by such a large amount, it means that people are wanting to hold onto their cryptocurrencies or to their Bitcoin in order to capitalize on an increase in prices or to invest in new products in the crypto space that are coming out. So crypto exchange outflow rate reaching a 2022 high is a bullish signal. And among the biggest recent buyers of Bitcoin is the Terra Luna Foundation Guard, which is on a mission to acquire $3 billion worth of Bitcoin but their ultimate aim is to acquire $10 billion worth of Bitcoin. And why they have done this is because they want to use Bitcoin as a reserve currency to back their UST stablecoin, which would mean that Bitcoin is now a reserve currency. So with just 2 million Bitcoin left to be mined since the 19th million coin was mined on April 1st, or about 4 days ago, the scarcity of Bitcoin is becoming an issue of note as adoption and investment increases across nations, corporations, and individuals. Obviously, limited supply is always a concern for central banks and the SEC, and this is mainly because they're used to whenever they need money, they can just print it, and they have unlimited powers to print an unlimited supply of money. And this is not the case with Bitcoin because it's limited to 21 million Bitcoin in terms of supply. So it kind of itches them a bit. But this isn't a bad thing, it's a good thing. It means that with a stable supply and with increasing demand, the value of Bitcoin is only going to go up in the future. And even though the price of Bitcoin will go up, you can still pay for your cup of coffee or restaurant meal because Bitcoin is divisible into Satoshis. So Bitcoin can be divided into 100 million Satoshis. So one Bitcoin is equal to 100 million Satoshis. So it's highly divisible, and this issue of scarcity won't be an issue going forward as they make it seem. On other adoption news, crypto venture capital firms are seeing a surge of assets under management. Venture capital firms focused on Web3 project and crypto businesses are accumulating billions of dollars worth of assets under management as more capital is injected into the sector. And obviously, this would be the case because blockchain and Web3 is the future and is proven to be profitable. So the money will flow there. Wherever the returns are pretty, that's where the money is going to flow. So in 2021, over $25 billion worth of venture capital funding went to global blockchain startups, which is a massive 7 times increase, or a 713% increase from the 3.1 billion in 2020. So 2020 was 3.1 billion, 2021, 25 billion. Imagine 2022, and this is where I want to reach, because expectations could be greater for 2022, and venture capital firms are keenly looking at Solana's NFT offerings for further opportunities, because they offer lower transaction costs than Ethereum at faster speeds. So basically what they're saying is that it's more scalable, it's cheaper and quicker, which is a double-edged sword in a positive note. And OpenSea, which is an NFT marketplace, the biggest in the world, started accepting Solana NFTs. And this is a big deal for Solana because because this development will help it reach probably the top 3 coins in the next few years, because Ethereum has been suffering with scalability issues, especially in terms of their gas fees and slow transaction times, which means that Solana might take over Ethereum as the king of smart contracts. On other news, more than 3/4 of central banks are considering a CBDC. So 80% of central banks are considering or have already launched a CBDC. And this only tells you that the central banks are aware that cryptocurrency is the future and blockchain is the future, so they want to get into it. They want to digitize their currency because they feel like stablecoins are a threat. And this makes sense. I mean, the more development there is in this industry, the better it is for everyone. And there are mainly 2 types of CBDCs, one being retail CBDCs that are issued for the use by the general public, and also wholesale CBDCs, which are for use by financial institutions holding with the central bank, usually as a backing for loans or custody. It's expected that CBDC research, testing, and implementation will intensify in 2022. So I think in 2022, and especially in 2023, we will see a lot more countries starting to launch their CBDCs, and I'm including the US here because the digital dollar is coming. Even though it doesn't seem like it, or maybe it doesn't seem like it to a lot of people, but there are great efforts being made to the presidential level. He even made an executive order to accelerate the process so that the digital dollar can be released within a year. Also, because CBDCs are coming doesn't mean that it's the death of stablecoins, because a lot of people think that. Stablecoins have already become an integral part of the crypto ecosystem, and it is impossible for any fund or institution to be active in crypto without using stablecoins. And stablecoins are here to stay. It doesn't mean that when CBDCs come, stablecoins have to die. They can coexist and they have their own functions. SEC Chair Gary Gensler says that retail crypto investors should be protected. He says that the agency's protections that apply to investors of traditional assets should extend to those in the crypto market. He also requested the SEC staff to explore getting crypto platforms registered and having them subject to the same regulatory framework as exchanges. He also says that they already have robust ways to protect traditional investors trading on platforms, and they have robust ways to protect investors when entrepreneurs want to raise money from the public. They want to extend these same protections into the crypto market, and this is a good thing because investors have to be protected. The crypto space and the blockchain space is a space that is full of scams. I personally know so many people that have been scammed by crypto startups, by meme coins. Billions of dollars are being lost every year to this. And I think that if these protections are extended to the crypto markets, investors will be protected from these type of scams, and these scams will diminish by maybe 90%. And we need these protections as common investors. So it is a win-win situation if these regulations come into place. Gary Gensler has also repeatedly urged crypto projects with securities to register to ensure that investors are protected in a come in and talk to us approach. So by securities, they mean obviously tokens. However, many crypto firms have criticized the lack of regulatory clarity in the United States, which can be subject to different types of interpretations from agencies. So if one agency interprets it in a certain way, another can interpret in a different way. This is what causes a lot of confusion because you could be clear in one area, but then you go to another department and they say this is not allowed. So you need a global regulatory framework that applies to the crypto industry for all of these agencies to follow in order for the crypto industry to be homologated and for these companies to work in a conducive manner. Finally, I want to speak a little bit about Intel. They launched a new Bitcoin mining chip focused on sustainability. Intel calls this chip the block-scale ASIC, which is a second-generation Bitcoin mining chip. It features a 580 gigahashes per second hash rate while just consuming 26 joules per terahash. As we all know, hash rate measures how quickly a miner can generate answers to Bitcoin's next block, while joules per terahash measures how much energy is consumed to produce every terahash, which is 1 trillion hashes. So a greater hash rate means greater computational power, which means greater problem-solving skills, which means that a Bitcoin can be mined quicker. So the aim is to have higher hash rates with lower consumption rates. And comparing a normal first-generation chip to this block-scale ASIC, Bitmain's Antminer S19 Pro Plus HYD delivers a hash rate of 198 terahashes per second while consuming 27 joules per terahash. And this means that the efficiency will increase by almost threefold with the second generation chip. And I can only expect third, fourth, fifth, sixth generation chips to become even more efficient because technology is ever evolving, and in 2 or 3 years they've tripled the efficiency of Bitcoin mining. So for me, it means that this is just going to continue. And Intel explained that it was built on a focus of energy sustainability in the context of ESG, because these are issues that plague Bitcoin mining since electricity consumption due to Bitcoin mining is very, very high. One example of a criticism of Bitcoin is Ripple's co-founder is backing a campaign to end Bitcoin mining entirely, which cumulatively consumes more energy than Norway. I mean, it might consume more energy than Norway, but half of that consumption is from renewable sources, so that reasoning falls away. And these energy-related fears are even influencing policymakers because last month, the EU wanted to ban Bitcoin mining altogether. However, this bill was rejected. And obviously it was rejected because they know what the capabilities of Bitcoin mining can bring and how much money it can bring to the EU. They know that the future is blockchain and by extent Bitcoin and cryptocurrencies. And they also know that Bitcoin mining is becoming more and more green as time goes on. So that's it for today's video. Thank you very much for watching. If you liked the video, please leave a like, hit the subscribe button, share this video with your family and friends, and I'll see you tomorrow for the next one. Invest wisely and cheers.